All right, I'll just wait another minute, but while we just wait for more folks to come, since we're missing a couple more people. Just some quick announcements. I've had a couple of advisors that were new that were coming in, so we had held off a couple of days to get for your advisor pairing email, so those should be coming soon. I know we received a couple of questions around those. And then the SKU Elevate program, just a quick reminder that their application is open until the end of the day tomorrow. So if you are interested in that, no harm, no foul, right? I recommend that you go ahead and apply. They are taking a couple of fellows from our program into that program. So it's good practice, honestly. It'll help you think about some of the things that you should be thinking about. So highly recommend applying. And just want to welcome Justin and Crystal from Propeller Industries. We are going to be doing some, are we doing accounting today or finance? I think we're doing accounting today, right?
Accounting, yeah.
Yeah, awesome. So lots of folks here have already have sent over some accounting questions in the past, just kind of getting ready for this class. So excited to kick us off. So I'll hand it off to Crystal and Justin.
Hello, everybody. Thanks for having us. I know we've got this like slideshow that Justin spent all night on, so we'll show it in a second. But just to like take a minute to introduce ourselves, I'm really excited to work with all of you. I have been with Propeller, which is a fractional accounting and finance company, for over 4 years. I love this place like dearly, and a big part of the reason why is because like we've got some pretty amazing people that we work with within the company, but also like more importantly, we get to work with a lot of companies and founders. And like I love working with founders, much like you, because there's always so much passion, and I have no idea where to even start when it comes to coming up with like a great, beauty line or the best new sparkling water. And so the passion that each of you bring to what you do and the opportunity to be part of your success and growing your company is always super inspiring to us. So I'm really excited to be here and talk about accounting. I oversee our US accounting team. We have over 60 accounting team members. Our team is about 150 people overall within the US. And then we have teams in India, Pakistan, and the Philippines. So just a quick overview. I'll let JVA introduce himself.
Yeah, I introduced myself a couple weeks ago. But hi again, everyone. I'm a VP of Finance at Propeller. And just wanted to say for this presentation today, the goal is not to teach you guys to be accountants. But I think we want to like teach you some basics. We're not going to go deep into debits and credits. And if you don't even know what those are, don't worry about it. But I think what we want to do here is teach you some essential sort of skills and give you a knowledge base to help you just understand accounting a little bit better. You might be able to, you will definitely be able to apply some of this to your QuickBooks file or whatever accounting platform you're using. And we'll go into some of those different systems that we like and that we recommend for early stage companies. And we can, of course, go deeper on any of this stuff. So we do have a presentation, though it's not scripted by any means, and feel free to jump in and just talk over us or interrupt with questions. We would prefer this to be more of a conversation than us just talking at you. So if you have questions, just jump right in and we can go deeper on any single question or item that we're talking about here.
And if you hear squeaking in the background, I have a puppy who's only 3 months old. So it's probably a toy that he's chewing on, which you can probably hear right now. So I apologize in advance, but he's pretty cute, so it's worth the noise. JVA, do you want to kick us off?
Oh yeah, I can do that. Yes, that's me. Sorry, that's my cue.
And if anyone has any jokes along the way, always love a good joke. So It's early. Well, is it early?
Don't tempt me. Don't tempt me.
Oh, yes. I love like especially dad jokes. So we got to keep it fun. It's Thursday morning, almost the weekend. So yes, as JVA said, we're talking through accounting basics today. My hope is that it gives you guys kind of like a solid ground in which to work with hopefully other people who are doing the bulk of your accounting. And if not, at least to set up some ways to automate the work.
Oh yeah. So the beginning of this is just kind of an overview of Propeller. I don't want to spend a lot of time on this because there's a lot of like accounting content we can get to here, but this is an overview of kind of what we do and how many clients we've serviced. We'll share this deck if you guys are interested in any of this, but we've worked with over 300 clients over our 13-year history, and we've got actually 300 alumni clients and then more than 300 current clients. And we've processed and done accounting for a lot of them, and all that totals up to some big numbers. So all that to say is we've got a lot of experience working with companies at this stage and larger, and we leverage that experience to kind of help our clients see around corners. And a lot of you will face the same kinds of challenges, and so bringing that experience to the table kind of helps our clients level up a bit. Here's a sample of some of the clients we've worked with. Most relevant to us here is the CPG column. Oh, did I miss one? And there's our, as well as we work closely with a bunch of investors in the space as well. We've got deep relationships there, which helps us to have a better understanding of kind of what those investors are looking for as they're looking for opportunities to place capital to work. So where we're going to start here is just kind of, and this isn't even really accounting per se, but just some easy steps you can take to kind of get going down the path of setting your business up for a success from an accounting perspective. So Crystal, you want to
do an emoji vote? So actually, if we go back to that last slide, I would love to do an emoji vote on how many people feel comfortable with accounting today or have had experience with any accounting. So pick your emoji of choice to show us how you feel about accounting. Oh. Okay. Got some celebrations, some shocked faces, yeah, I feel good. Okay. Good to know. It's always good to know where where everyone stands within the spectrum, because some people feel really comfortable and are like, okay, I know all of this, just cut to the chase, Crystal and JVA, like we need to keep moving. Versus other people are like, wait, I have no idea what you're talking about.
Yeah, so. No, and I'll say too, Crystal, like we see a lot, like our founders come from all different backgrounds and have different experience levels when it comes to accounting and just reading financial statements. So a big part of what we do is educating them when they first come in to Propeller on just how to read financial statements and what their financial statements are telling them. As well as putting in place some best practice accounting processes.
Love Liliana's shrug. Modern face. Okay, so 5 steps to just setting up. This is like truly basics. So the first thing you want to do, and I see this a lot even with clients that are coming in and doing well revenue-wise, is please separate your personal and your business expenses. It's the first place to start. Start with a bank account, create a bank account for your company. If you need to get a credit card, also create a separate credit card that you're using for business expenses only and not personal. I like to make the joke, if you've got a food expense on there because you had a really great meal and it's 3 months down the road and you're like, wait a minute, was this from a date? Was this like a first date from from one of the dating apps that I went on where we had a match? Or is this actually a meeting that I had with a client or a potential co-backer? So definitely want to keep your expenses separate. If you don't keep them separate, there is some personal risk there. And that's essentially the biggest reason why you want to, again, keep them separate is so that way you make sure your business finances, you're not being held personally liable for any debts that you might incur that aren't related to the business. So yeah, create a separate bank account or a credit card account. The second thing you want to do is figure out which systems you want to use. We'll actually go through systems more in a second, but you're the CEO, you're the innovator, you're also the coffee barista. And so because you are wearing so many hats on any given day as a startup founder, you want to make sure that you choose systems that are automated and that you can automate, giving you time back in your day to do the other work that needs to get done. Like I said, we'll go through more of the systems in a second, but the goal is to find ones that automate the work. Every transaction you make, every expense, most of these transactions that enter your accounting software usually fall into 5 different account types. So either it's an asset, a liability, an equity, or revenue or an expense. And so if we find ways to use programs like QBO that automate the work, it'll help put those into the right categories and reduce your workload. So that's second thing you want to get done after you get your business bank account. Third thing you want to do is choose an accounting method. So for those who haven't heard, there's a difference between cash versus accrual accounting. Since all of you are CPG companies, I will get straight to the point and say you have inventory, so you've actually got to do accrual accounting. What that means is you are earning the revenue. So you would record the income when you earn the revenue rather than waiting for them to pay you. If it was a cash basis, as you receive the money is when it would be recorded. But this is when you're invoicing. So that makes it accrual. At the end of the tax year, it'll help identify your income versus expenses better for your tax CPA. So same goes for deductions. If you deduct them when the expense is incurred, not when you pay. So that'll give you a better P&L for your investors when you go to fundraise.
Yeah, let me jump in here, Crystal, if I could. Like, this is a fundamental accounting concept, and it's I want to spend a little more time on this slide just to make sure everyone kind of understands at a high level, because we don't need to go deep, because like accrual accounting is essentially the reason that accountants exist, and it can get pretty complicated pretty quickly. But the general idea is that we want to recognize revenue and expenses in the period that they occurred, essentially. So if you have a lawyer that's providing services in the month of April, they may not bill you for that until June. But when we're entering that information into our accounting system, we want to make sure that we're putting that amount in April, where the work actually happened. Right? Does that make sense to everyone? Just at a high level, ignoring for now the how to get that into the system. Yes, no, I can only see a couple faces. So.
No, there's also messages coming in the chat. So yes, everyone's on both.
I've got the chat open. Okay, cool. So yeah, as I said, it can get very complicated very quickly, but and you should get help if you need it. And early on, like, it's going to be probably some hybrid of cash and accrual basis, but you will be filing your taxes on an accrual basis, and your tax accountant can help you with that. And there are other service providers that can help you kind of get things straightened out. But as far it's also important, like, not only from a compliance perspective, but for understanding your business and how your business is actually working, because you don't want to, a good example is revenue and cost of goods. Like if we're in April and you just ordered a big run of, or your first run of product, and you spent like $20,000 on it, a lot of people's first inclination is to just book $20,000 in April as a cost of goods, but you're not actually going to sell all of that in April. Maybe you will if you're lucky, but usually that's enough inventory to last you for several months. So you're going to be selling through that over time. So cash basis, you would just book that expense as cost of goods in April, and then the revenue would come in as it came in. You might like sell some of that and bill for it in April, May, June, and July, and then not get paid for it until even later in the year. But in accrual accounting, we would actually book that that inventory purchase on the balance sheet and then recognize it as cost of goods as you sell through the inventory.
Sorry, Justin, to summarize, accrual is the best way to proceed forward for the smaller businesses. Am I getting that right?
Yeah, you guys, as businesses that carry inventory, you guys will all need to have accrual-based accounting. Yeah.
Got it. And so, can you also perhaps shed a little light on, when you're out there trying to raise, let's say, $1 million for your business, typically I have seen the first thing that somebody asks is, okay, what's your revenue? And they want to see those high revenues and so forth. So how can a small business try to explain to an angel investor or a VC that, hey, we have these good accounting practices, we have good profit margins, and it's not just about the revenue?
Well, it is about the revenue, but also, and we'll talk about this, we'll get into this a little bit more detail next week.
Okay.
But the revenue and growth is important, but also so are some of the other KPIs and metrics that are part of the financial statements, like your gross margin and your current ratio, some of the ratios on the balance sheet that we are more kind of finance topics that we can talk about, but those are more indicators of the overall health of the business. And then the P&L sort of trend is really kind of what they're most interested in. Are you growing? Do you have traction in the market? Are you adding new distribution? How are you performing in those new doors when you're opening them up? Are you getting reorders? Things like that.
Got it. Okay. All right. Thank you.
You bet.
Great question.
Okay. Okay, so I won't say any more about accrual accounting now, but happy to go deeper with anyone on an individual basis, or we can come back. We've got time for Q&A at the end if anyone's still confused about that. Again, don't worry too much about just how to do it or the mechanics of it yet. That's what accountants are for. But just understanding that sort of core concept of expenses and revenue in the period that they occurred is the key there.
I think also asking the question, right? Like if you are going to engage with a bookkeeper, letting them know, hey, because we have inventory, I do want to make sure we're doing accrual accounting versus cash accounting. So that may also be where it's helpful. Okay, so number 4, it's all about organization and document retention. This is usually the first thing to go. I always think about the overflowing shoebox of receipts. So the best thing that you can do is come up with some storage options. So we recommend Dropbox or Google Drive. Those are usually, cheaper to use, have large capacity. But the biggest things that you'll want to keep organized and keep copies of include bank and credit card statements. Sorry, Naisha, didn't mean to call you out. Receipts for any business meals, parking, travel expenses, office bills like utility or rent or internet, copies of your financial statements and how they've changed over time, and definitely copies of all of your tax returns. The biggest reason for keeping all this information is always, first and foremost, our friends at the IRS, who always like to come a-calling occasionally and ask for copies of everything. But then there's also, honestly, like like down the road, as you get into diligence work with any potential investors or fundraising, like doing fundraising, they may start to peek in at your books and want to like make sure that everything is well. And I think having good practices in place from the get-go will just make you look more organized to anyone who's looking into your financials. So again, definitely these things on the list. If you can use Dropbox, Google Drive is an easy one, but want to maintain and keep documentation for all of them.
I would just add to the list, and maybe it goes without saying, just like contracts, any contracts you have with distributors or co-packers, particularly, or you want to keep those handy, and investors may want to see those as well.
Yes. Numero 5, which actually goes to some of the stuff Madhu talked about. Understanding your financials. That's going to be a huge part of next week's conversation, and what the key metrics are for the industry. Justin touched on gross margin. I always call that the financial IQ score, or like he said, it definitely judges the health of your business. But we want to spend some time next week talking through, what do these metrics mean? How do we talk to them? How do the financials tell the story? Yes, when you look at the bank account balance, you know exactly where cash is, but the ups and downs in your financials do tell a bigger story that you need to start to get comfortable with in how you speak to. So are your shipping costs too high? What is the reason driving that? Are sales up? Yes, that's great. If sales went down 1 month, why did they go down? Are there ways to make sure that sales continue to go up? And what would be the driving factors of that? Are there new contracts coming in? Are you working, for pricing? Are you working with a new co-packer to get pricing down? So that would increase your gross margin. So we'll definitely, like I said, spend a lot of time talking about this next week, but want you to come away from the next 3 weeks feeling really comfortable on how to talk about your financials and how all of these key metrics drive the story. Yes, can't wait either, Madhu. The metrics are the fun part for me, in my opinion. Okay, financial expectations through the growth cycle. Justin, I'll let you take it from here.
Oh, I'm on this one? Okay.
Sure, why not?
So this is just a little chart that we put together. There aren't like real numbers behind this graph here. This is just meant like, you can see on the y-axis here, we've got sort of financial sophistication. So early on, this is kind of like where we're all probably somewhere along this line right now, right? Which means yes, accrual accounting is expected, but what else do our investors or other stakeholders going to expect you to have at this stage? And it's pretty basic stuff, and we'll run through some of these systems, but it's just like things like a bank account, like your own business bank account, a QuickBooks file, or some accounting platform that you're tracking, that's not Excel, basically. Bill.com isn't necessarily a requirement, but we put this in place with all of our clients. And it's a great time saver for paying bills and tracking bills, and it connects directly with QuickBooks. So that goes back to a little bit of that automation Crystal was talking about. This is going to make your lives a lot easier when it comes time to pay bills. Dedicated credit cards, payroll. If you've got other staff, I'm guessing most of y'all don't have anyone on payroll yet, but when you start to think about making that first hire, you're going to have to think about, okay, how am I going to track taxes and all the things that come along with that? And that's pretty complicated on its own and is probably worthy of its own discussion, but there are systems out there that can simplify the process and make it a lot easier for you. And then there's expense reporting platforms that can help you track your credit card expenses, like Expensify, or Tally is another one that we like. And then just some basic kind of accounting practices and closing the books every month. And what that means is just that you're kind of reconciling things and making those entries to kind of get everything captured in the proper month. Again, an accountant can help you do that. And then that organization that we're talking about, and then some sort of forecast or budget. It's pretty tough to operate a business without a budget, though you can do it for a while, but it's even tougher to raise money without a budget. Any investor that you talk to is going to want to know, not only want to know what your business, how your business is performing now, but how you think it's going to perform in the future.
I'm gonna chime in real quick. Go to Naisha's question. Naisha, you asked a question about invoicing. Is that invoices, paying invoices on the bill side, like bills, or invoicing customers?
Invoicing customers.
Okay, perfect. So I would actually recommend using QuickBooks in that scenario. And I'll talk a little bit more about why in the next slide. But yes, you will want to move away from PayPal, because I don't know that it necessarily syncs with an accounting software, and that would end up creating more work for you, because you then got to go move all of that information into another platform. So like I said, where you can automate and make and give you more time back is helpful. I have seen some people use Stripe. I still recommend, honestly, QuickBooks at the end of the day, because it's all then in your financial software package. And I've also seen some people use Bill.com. They do have like invoicing capability, but it syncs over from QuickBooks. So again, I always go back to QuickBooks. So at the end of the day, I would choose QuickBooks for all invoicing when it comes to customers.
Thank you. That's super helpful.
So Eugene asked a question here. Do investors essentially want to have a view of your bank statements and QuickBooks data over a certain period of time, say 12 months? So from this perspective, what I will say is not your bank statements specifically. What they want to see are your financials. So we'll get to the P&L and the balance sheet, but those are the two biggest statements that they're going to want to see, and then probably, if they can, a cash flow report. Those are the three biggest statements that most lending companies, investors will all take a look at. That balance sheet will actually show your running bank account balance on it, but it's also showing the value of your company at any given point. The P&L is showing how profitable you are. So, and like I said, we'll get to those in a minute, but yes, they will want to see it over a period of time, because at the end of the day, they want to see that your business is growing, and that's how they see it, is looking at the financials.
I'll just say, as far as that period of time, that's going to vary between investors. At this stage, like, there's not a lot of history, so last 12 months is probably sufficient for most of us here on the call. But as you grow and you build up more and more history, I've seen investors, a lot of investors will look back 2 or 3 years. I've seen some investors go back 5 years, so that's probably an exception. Because in high growth companies, like, what happened 5 years ago isn't particularly relevant to what's happening in the business now. But yes, at least the last 12 months. Look, even if you're just launched within the last 12 months, they want to kind of see that progression. But good question.
Okay.
Sorry, one more thing to address here on this slide before we move on. So everything I just described up here just sort of like falls under the heading of minimum viable accounting. This is just like doing the minimum to keep sort of the accounting train on the track, so to speak. And it's really, and that's all really, like, investors will expect you to have at this point. They're not going to expect you to have sophisticated accounting systems or processes in place. They get it. They know you're founders and are kind of wearing many hats and may or may not have accounting expertise to do a lot of some of the stuff that later stage companies will do. But it's at this inflection point right here is really kind of around Series A. We've got it labeled as here, but this is really the point where you're bringing in institutional capital for the first time. Maybe you've got a board to report to for the first time, and it's really time to kind of make that first big leap to more sophisticated, professionalized accounting processes and financial reporting. And so at that stage, you're looking at bringing it in. You probably don't need a full-time CFO or VP of finance yet, and that's kind of like the gap that we at Propeller fill. So that's typically the stage that we engage with brands, and then we will help get some of these other processes and things put in place, and then sort of help get board decks ready, and build those reporting and dashboards out, and help sort of track some of these other metrics we're going to talk about as well.
I want to go to Trisha's question really quickly.
Oh, sure.
So Trisha, do you want to say your question to the group? Because I have a follow-up question. But you mentioned you have a skincare services company right now, and you're adding in your own products, and you want to know whether or not to get a second bank account and credit card. My follow-up question is, are they two separate companies, or are you operating everything together as one business?
Right now, I'm operating everything as the same business.
Okay. So in that case, you won't need a second bank account that's separate from your business checking account today. You can keep everything together. We just want to make sure your personal and your business are separate. Okay.
But I would say too, like, you might want to like reconsider that, Trisha. If you're thinking about trying to raise capital from outside investors, and I don't know the profile of your services company, but they may not be as interested in that side of the business as they might be in the products. So to the extent that those two lines of business can be separate, it might be easier to raise capital for one versus the other.
Yeah.
But also you may have a skincare service that's growing and worth investing into. I don't know, but there's something to think about.
It's so tricky because I use all my own products in the services, and then I sell them the products afterwards. So it's very tangled together.
Yeah.
I would probably have to check them out separately.
I'll defer to Justin here. I would still keep them together personally, because I think that you probably have more income coming in currently for your skincare services business.
Yeah, a lot more.
So, yeah, and so being able to show the growth of that business and then tie it to how you can increase the growth of your products, like that I think is important. But then I think the one thing that they might want to see is, can you grow those products outside of your service business? Is that something that you want to do, or is that something that you always want to keep tied to your services business?
Oh no, I definitely want the products to go crazy.
You're like, no, I want it in anthropology, Ulta,
yeah,
everywhere. Okay, yeah, and I think as that starts to get more complicated, that's where Justin is correct. Like, you'd want to start to separate them out because they become two different types of business lines, and you may have an investor who's really interested in where the skincare products are going, but not looking to invest in necessarily a services company.
Got it.
Yeah, and that's all part of the process of finding the right investor too. And I think it's fine to keep them together for now, but as you're shopping it around and getting to the point where you're ready to raise capital, just be open to those suggestions from investors, because an investor might come along and look at your financials and say, hey, this is great, but I'm really, like Crystal said, I'm really only interested in the products piece of it. If I invest, I would want you to spin this out into a separate business and invest in that on its own. And then essentially your services business would become a customer of the products business, basically.
Okay. So I would just like buy the products from myself and put it into that separate account. Okay. Thank you.
Okay, systems. I feel like I'm selling QuickBooks, but I'm not trying to. I'm not a QuickBooks sales rep in any way. But I will say, more often than not, with early stage companies, we see one of two softwares, and that is QuickBooks Online or Xero. I have a personal preference towards QuickBooks. And look, Brittany's a fan too. I'm glad to see that they're the fans of QuickBooks. I've also been using QuickBooks for literally 25 years. I think I started using it when my dad started his own business, and he bought it at Best Buy in a box in those plastic containers that didn't allow you to like open them until you got to the register. And so it's just like very familiar to me, and it's very easy to use. So I definitely recommend QuickBooks. So why is it important for you? So we want to make sure that you have a financial hub, that you have like the great thing about QuickBooks is it's grown to a place where they now have this online platform, and that cloud-based platform allows you to see your financials even on your mobile phone. So let's say you're at a Naturally Austin event and you're having drinks with people and you meet an investor and they're like, oh, how are you doing? And you're like, oh, let me show you. You can pull up your phone and show the dashboard there of how your financials are and how they're growing, right? And so I think being able to see how you're doing at any given time and take that work with you where you go is important. But QuickBooks is also just easy, and it's got a lot of capabilities for automation, which is to me the most important piece. So in QuickBooks, you're going to manage you're going to sync up your bank and credit card accounts. And once you connect them in QuickBooks, you can create tags that will allow you to easily capture those expenses and put them into the right expense accounts or the right, asset or liability accounts. I talked earlier about using it for invoicing customers. There's two reasons why I like using QuickBooks for invoicing. One is you can email straight out of QuickBooks the invoices to your customers. And when you send that email over, if you connect it to the QuickBooks Payments feature, it's got an easy button that you press on it that the customer can then click on it and pay the invoice. And then that payment and everything gets recorded immediately in QuickBooks. So again, it's taking some of the work out for you, where if you were doing this in PayPal and it was separately, then you're going to PayPal, you're creating the invoice, maybe you're getting the payment then, and you've got to come back into QuickBooks and record all of that information. So it's doubling up your work versus if you were doing it in QuickBooks and using that and had that that QuickBooks payment feature set up, then they can easily pay it and everything is getting recorded in the financials for you. The other thing I like to do on the invoicing side is you can set up monthly statements to go out to all of your customers, and it can do it automatically. And I like to do that so that way it takes, again, some of the pressure off of me or off of the founder, and those statements are regularly going out at the end of every month. It also will have that pay invoice feature or that button on it. So that way when they get that reminder, they're immediately paying and getting that paid. Okay, we have some quick questions. So I'm going to go into these really quickly. So online versus desktop version, great question. I would actually err on the side of using online right now. I personally love desktop. I'm a huge fan of it. But as you move to perhaps an outsourced accountant, it doesn't go with you anywhere. And so you end up having to put the QuickBooks desktop within another cloud like Networks. And when you do that, it becomes more expensive versus if you just use QuickBooks Online from the get-go, it is a cheaper product. And it's cloud-based, so you don't have to carry your desktop machine around with you. Okay, Brittany has a question. Accounting considerations for business with recurring revenue and subscription models. Ooh, now that you've mentioned that, we will take some time. I think next week we can build in that time to talk about that because it is definitely different than if you were just sending out invoices as orders came in. Retweet of Brittany's question. Yep, doubling down. Okay, we will. Justin, make a note.
Got it. I also wanted to go back to Madhu's question a little bit and say a little bit more about the difference between desktop and online, other than the portability. QuickBooks Desktop has a lot more inventory functionality, which could be useful early on. Though we have moved away from putting new brands onto QuickBooks Desktop, and all of our clients are either coming in to us with QuickBooks Online, or we're setting them up on QuickBooks Online. At this point, we still do have a good amount of clients that still use QuickBooks Desktop, but Intuit has really stopped supporting that software. They're not developing it any further, and they're not adding new integrations or features to it. It's basically been put out to pasture, so to speak. So while the inventory functionality is nice, and like QuickBooks Online does not handle inventory well, we like QuickBooks Online more at this point, because of for some of the reasons that Crystal mentioned, and it is pretty ubiquitous. There is, like, we see Xero a bit, but we don't love that platform. But just from the fact that it is ubiquitous, it has so many integrations with all the apps that you might want to use. We like it for all those reasons. And then as far as brands that need to track inventory and build inventory and have detailed processes around that, there are a couple of softwares that we like that sort of plug into QuickBooks and layer on top of it, as opposed to using the built-in feature set of QuickBooks Desktop.
Yeah, one of the very first accountant we had hired, he insisted on us getting a desktop version, and also he said security-wise it's better, but we understand operating.
Well, sure, yeah, because it lives on your local machine. Yeah,
right. That, and then the inventory thing is what he had mentioned, but I think we would love to actually switch online, and this is the kind of, it's better to hear from you guys on the value of online versus desktop. So I think we'll be making the switch hopefully this year.
Yeah, it's so many softwares are going cloud-based, which I think is like the biggest thing, right? If you are going to the other crazy thing about software is they have very short lifespans unless they catch on and the kind of get sticky with people.
Yeah.
Like Bill.com is a sticky platform. A lot of people tend to use it over a longer lifespan. But because QuickBooks has so much money behind it, and specifically have incentive right now to drive the online thing because it's cloud-based, they are integrating, like Justin said, with a ton of other softwares. And so if that happens and you're always like looking at other cloud-based softwares, it's always going to be easier to plug in and integrate those with online versus desktop. There tends to end up being more issues. And like I said, from a cost standpoint, it's just easier to go with QuickBooks, even if you're adding on and layering on all of these other softwares that then integrate with QuickBooks. I promise at the end of the day, it weirdly is still cheaper.
Yeah, I think Shopify integrates really well with online QuickBooks. That was one of the things that we had looked at, but I don't know, like for a lot of us, like as small brands who are operating on Shopify, I think that online integration is probably a really good thing. So,
yeah, and it's Shopify, BigCommerce, which will come up at some point, Square, PayPal, Amazon, and then payroll softwares like Gusto and JustWorks. All of those integrate with QuickBooks. And again, if you're looking towards automation, right? Again, making the work more efficient so that way you have time to go do the actual like necessary part of your business, like you want to use those integrations so it reduces your workload.
Right.
The other thing I'll point out about QuickBooks is as you create your first operating budget, it's an easy place to plug in and see your budget versus actuals instead of using an Excel spreadsheet. And again, then it'll give you that dashboard where you can see here's how I'm tracking to budget. Here's the difference, and you can make adjustments and tweak it. But it helps for that first go round. Bindu, I know you asked a question about inventory programs, and we actually have a slide for that. So we'll talk about it in a second.
Brittany had a question about Xero, the pros and cons of using Xero. And Crystal, you may have a more nuanced take on this. I don't love the reporting in Xero. Like, Xero works, it'll get the job done for sure. I think it's designed more for and I don't mean this in any kind of derogatory fashion, but more for mom and pop type businesses that are not planning on growing or scaling. But for me, like the biggest sticking point is the reporting. So if I wanted to look at a monthly income statement in Xero, I can run that and pull it up in the system, but it's structured so that it's like reverse chronological order. So from right to left, it would have the most recent month, or from left to right, it would have the most recent month followed by the previous months, whereas everyone else in the world looks at it in chronological order, starting with January, February, March, and so forth, right? And that's a big sort of like mental blocker for me.
No, actually, that's exactly what I would say.
Okay.
And I think, honestly, over time, it's easier to scale your business using QuickBooks. What we mostly end up seeing with Xero is there ends up becoming an inflection point, where you have to switch anyway. And so if that's the case, I think it's always easier to start with the thing that causes you least headaches down the road. So. Okay, I'm done selling QuickBooks. Bill.com. Okay, so we honestly, this is the thing that personally changed our business and allowed us to move towards an outsourced accounting and finance company. And the biggest reason why is because in 20 years ago, what would essentially happen is you'd wait for the bill to come in the mail. When the bill came in the mail, then you would write a check and send it back in the mail and have to go to the post office, put stamps on everything. Bill.com kind of changed that for everyone in the sense that most companies are now online and allow you to go pay online. And that's essentially what Bill.com started. It is a hub for all of your accounts payable. So all of your vendors can send in invoices directly to Bill.com. And if one comes to your email, you can forward it to Bill.com. It also has a ton of automation features, which will essentially read the invoice and immediately capture the data and plug it in. From there, you can pay all of your bills within Bill.com, and that information will connect to your QuickBooks file and instantly sync over all of the information. So it's got some increased efficiency and time savings as a result. Again, always thinking about automating the workload. The other nice thing is it does have a lot of storage capability as well. And so we tend to ask our vendors to send copies of their W-9s to Bill.com directly, and we'll save it as part of their vendor profile. This is always useful when it comes to compliance time and you need to send out 1099s to some of your contractors that you're using. You've got that information easily saved. The other thing that I like about it personally is if you're paying your vendors through Bill.com, it sets them up with their own dashboard and their own login. And so at that point, every time you pay them, it'll send them a notification that payment is on the way and when to expect it. And then they can go into this dashboard and also see a record of all invoices that they've sent to you and when they've all been paid. So it creates a ton of clarity on both ends, from both your side, the business, as a founder, but then also from the vendor side, and seeing what's gone out, what's been paid, what's in process or en route to be paid. You can pay with, connected to your bank account and pay via ACH. You can connect it to your credit card as well. They have a couple, several different ways of paying bills through the platform. Incredibly secure. You can also schedule future payments and schedule them out further. But instead of going to all of those different websites for all of these different vendors, it's centralizing all of that information into one platform and then syncing it over seamlessly to your QuickBooks. Yeah, I'll stop there for a second. Did anybody have questions about Bill.com? Did I sell it? I just honestly, more than anything, what I love is it meant that I never had to go to the post office again, because that was not my favorite part of the day, is going and buying stamps and sending things out. Even when we got the little like mail systems, right, that you could stick it through and put the postage on there for you. Okay, so that's bill.com. Payroll. Actually, let's do an emoji vote. How many people have more than one person working in their company and need payroll? No emojis. Everybody's
Got
drinking.
one in chat, Jordan.
Okay. Jordan, awesome. Okay, so these are the two payroll systems that I prefer, and that we at Propeller prefer. And I've put kind of like a side-by-side comparison between the two. I love Gusto. Part of the reason why I loved Gusto initially was because the graphics were really cute and had this tiny little piggy that came out and celebrated everything. It's very simple to use. It has a lot of self-service features. So when you add a new employee, it sends an email to them and asks them to basically input all of their onboarding information. And from there, you can run payroll. Most of the time within Gusto, I would say with Gusto, you have a little bit more control as far as like when payroll is being run. They do offer benefits, workers' compensation. They have some advanced HR people that can help you with some stuff. But what I will say is, as you get, like, let's say over 5 people and they start asking questions as far as like, hey, are you going to offer more benefits, more robust offerings like 401k or anything like that? That's where I would move to a PEO. Does everyone know the difference between a PEO and a non-PEO? So with Gusto, it's not a PEO. JustWorks is a PEO. What it specifically means is you are now an employee of that company, technically. And so it allows you at the end of the day to get cheaper benefits, because when those benefits are being purchased for this group of people, it's doing it off of that entire base versus just off of 5 people or off of 10 people. So it makes benefits more affordable. I also find JustWorks to be really, I try to make my life easy, and so and I suggest this to founders, which is the more people you can put on a salary, it's usually easier. And so with JustWorks, you can set up people basically to be on a salary payroll. You've got a dedicated HR consultant who is certified, so they have a stronger skill set within that HR framework, and they can help you make sure that the compliance is getting accurate. They'll also do all of the compliance, because at that point they're now again an employee of JustWorks versus an employee of your company. They're still getting paid on your behalf, but those W-2s, those, all of the year-end compliance work, that is going to be completed by JustWorks. And it kind of takes that pressure off of you at the end of the year to get that done. Versus in Gusto, you'll want to go in there and you'll have to review everything before it gets processed. Both of them connect to QuickBooks Online. One is definitely slightly more expensive, but again, the reason why it's expensive is because at that point you're now an employee of that company and you get a few more benefits at a cheaper cost. Okay, Madhu wants to pay himself. Please pay yourself. I'm sorry, Madhu. And then Jordan, you mentioned you just moved from Paychecks to QuickBooks. Thoughts on QuickBooks? QuickBooks actually used to be my favorite system. And then I started working with Gusto and JustWorks, and I just found them to be much easier. QuickBooks Payroll is a lot like Gusto in the sense that it's a payroll provider, but not a PEO. And so again, when I go back to like who's offering benefits, who's giving my employees a more robust experience, that's where I'm going to get it from JustWorks versus from Gusto or from QuickBooks. QuickBooks, the way to think of it is like you kind of have control over everything, and it's up to you to run that payroll. I'm going to go back to automation and efficiency, which is the more you can get set up for someone else to do for you, it's just going to give you more time back.
And also, I don't think QuickBooks, this could have changed, but I don't think QuickBooks actually files or pays the taxes associated with payroll, right? Whereas both Gusto and JustWorks do that. Katrina, can we get a quick time check? Are we done at 11 or 11:30 or something?
You're done at 11.
Okay.
But we did block off a larger time. Usually in the earlier classes, there's a lot more questions. So I did allocate a little bit more time.
And Jordan,
maybe-
I'm happy to connect with you offline if you have some more questions, or with anyone who has more questions, because I know we're going through this a little too slow, so I apologize for that. We can skip over Expensify. Main thing to know here is don't put all your receipts in a shoebox. It's easier if you have an application on your phone. It can take pictures of all your receipts, so you immediately digitize them and it syncs over to your QuickBooks. I will also recommend considering Brex, which is basically a corporate card, because it'll help take some of the paperwork and expense management, make it more efficient for you. So we can skip that one and kind of keep running. I think we had some questions around inventory systems. So the two big ones that I wanted to call out were SOS and DEAR. QuickBooks does offer inventory management, but the way that I think about it is inventory in QuickBooks is only worth using if you are not making the product and you're getting a fully purchased, like a fully complete product. So if you are working with co-packer John, and John makes everything for you and sends you an invoice at the end of the day with the full landed cost of what that product costs you, then it's easy to put that into QuickBooks. But as you start buying some of the raw materials yourself, then it becomes better to use an inventory system that plugs into QuickBooks. And so that's where we recommend SOS and DEAR. SOS is cheaper. Both of them integrate with QuickBooks. They also integrate with Shopify and a couple of other platforms that can be important. Where the inventory systems are helpful is, again, if you're making the product yourself, then you go in there and essentially there's a bill of materials, which I always call the recipe. And on that recipe, you're going to put in all of the things that it takes to make a single product. And then you'd combine it and it would create, a lot being LOT or a group, right? A pack. And from there, you can do invoicing out of SOS and DEAR, and all of that information. It's a two-way sync, would sync back into your QuickBooks. It allows you to track open POs. If you send a PO, a purchase order, to, again, a supplier, then that information is also being tracked in the system and is showing you, oh, well, you ordered 500, but you only got 450 of that item. And so, are you waiting for the last 50, or do you want to go ahead and close that purchase order out? When was it received versus when was it ordered? Biggest thing, honestly, at the end of the day for inventory systems is you want to know exactly how much your product is costing you. And that's where this starts to get more nuanced. The more dialed in you can get on how much the product is costing you, the more that you can understand, where do I have the ability to, where do I need to update pricing, or are there areas in which I need to go renegotiate some of the costs of these raw materials. So seeing that information, and the more detailed you can get is the better. It will also allow you to do some reporting on, am I making a profit based off of each product that I'm, product type that I'm selling? What is the average sales price looking like? The average, again, profit per SKU or per product line. JV, do you want to add anything?
Yeah, I would just say, thank you for asking about these, Bindu, but I would wager that all of y'all are probably a little too early to actually need one of these systems. You can get by for a while with some tracking in Excel. Do track it and do keep track of the cost of things, but I don't think anybody here, and I'm happy to talk about it one-on-one with anyone, but I don't think any of y'all should necessarily go out and try to implement one of these systems. Deer in particular is pretty complex and feature rich, and you're going to want, before you implement any inventory tracking system, you're going to want someone on your team that knows how to, like an operations team member that knows how to track inventory and maintain one of these systems, because these are not very automated. So as with any software, the more features they have, the more sort of upkeep they require. So it's good to know about them and know that they're out there, and be considering them. But as your supply chain complexity increases and your volume increases, that's when you need to start thinking about bringing on a separate system to track inventory.
Justin, when you talk about volume, what kind of volume? Like what revenue would it be best for?
It depends. I can't put a revenue number on it. It depends more on like the supply chain complexity, really. Like how many different vendors are you buying materials from, and what's the lead time on those, and how many different kind of co-manufacturers are you using, and what's the lead time on those, and how many production runs are you trying to manage at any given point in time, right? Or how many different product categories are you using? Maybe you start with one product category, but you're branching out into launching something else that requires a new supply chain and a new co-manufacturer. So things like that are kind of exponentially increasing the complexity of the supply chain is when you might want to start thinking about bringing on a separate system. But right now, if you're just doing a test run, I'll use that $20,000 example again or maybe it's 20,000 cases of whatever your product is. You're running that, you have a pretty good idea of what that cost is, and can then reasonably make an entry to recognize the cost of goods as you're selling through those items. But the more kind of diversified your SKU set gets, and like different flavors or different varieties, even within the same product line, are going to have different costs. So the more you grow, the more sophisticated your processes get, the more you're going to want to keep track of those individual things.
Jordan, was that helpful? Okay, I was trying to answer her. I was trying to get you to answer her question, which I've actually had your milk, so I know you have different flavors and stuff. It's really good stuff, y'all. If you have not had the Frank's milk, you go on to Farmhouse Delivery, order yourself some. It's delicious. Yeah, I think if you have some more questions around that and whether or not it's time to go to an inventory system, you can connect with JBA or I, and we can kind of help walk you through that. So, okay. I think that wrapped us up for systems, which meant the next part would have actually been going through financial statements. We can save part of this conversation for next week, and essentially do financial statements plus all the key metrics. How does that sound to everyone?
I'll make sure to share the decks also, Crystal, so that everyone has access to it. And then we're recording these, so we'll share the recording and the deck for everyone to reference.
Perfect. Any lingering questions? Did that help as far as where to get started?
And maybe a quick temperature check for Crystal and Justin, since they are providing us with a lot of amazing information. Since we're going to be covering the next round of topics, as Crystal mentioned, if there are any specific requests, perhaps, so that Crystal and Justin can maybe help hone in a little bit as well on any potential concerns as we go into the next topic, this is a great time to share that information.
Feedback is a gift.
Yeah, we've got subscription concerns on the list. What else?
Subscription revenue, metrics, projections.
yeah, we'll get into those a little bit next week, I think.
If not, Katrina, we have 3 weeks of this.
Yeah, we've got 3 sessions, and then we can also set up some office hours, and some of the Propeller team also, there's a couple of other people that will be playing an advisor role, so perhaps a group office hours would be helpful. I know that the financial topics are always the heaviest because there's a lot to work through, and everyone wants to get it right, and particularly getting set up correctly out of the gate is just helpful for everyone, right? So in the meantime, since we're running out of time here, feel free to email me, and I'll post it in the Slack channel, and maybe Crystal and Justin, I'll add you to that Slack channel. That way, if anyone has questions there, we can maybe tackle some things on the fly as well.
Yeah, I've got our contact info here too for y'all if you want to grab that really quick. Or I think Katrina's going to share this whole deck too, and this is in there.
Yeah.
And I think one of the last learning modules that we'll go through is fundraising. And at that point, we'll also honestly take a look back at financials and talk about some of the key things that are important to show to investors as you go through that process.
Yeah. And that's actually a great segue into a conversation or a call that we are having around the state of fundraising. So in the Slack channel later today, I'll drop some links to some upcoming events that I think can help support this conversation as well. I know some of you have reached out already for fundraising resources. So I would highly also recommend attending that event. And then I'll just list out all the other events that we have coming up. So thank you so much for everyone's time. Crystal, Justin, as always, pleasure to see you. And thank you to everyone for your 1 hour investment today. So we'll see you soon.
Thank you.
Thanks, y'all.
Thanks,
Have a
y'all.
good
Thanks, everyone.
Bye.
Bye.